Yo, I'm back with a quick little weekly outlook. I know I haven't posted in a while, but I'm gonna start posting some weekly outlooks, probably some trade recaps now. And yeah, let's get into it. So starting off with July. July is a big month because it's the start of a new 6-month candle, start of a new 3-month candle, start of a new monthly candle, and the list goes on. So we do have some new power of threes that we do have to look forward to, basically, and basically like quarterly theory in general. And yeah, we're at an interesting point. DXY is looking good. It looks like it's gonna run to a certain point, which I'll go into later in the video. But yeah, starting off with NQ, the monthly time frame. I took standard deviations from this market maker buy model we had previously on the monthly time frame, bouncing from a yearly fair value gap. We respected constant encroachment perfectly, and basically taking the standard deviations, it looks like 2 to 2.5 lies around the 21,800 range. And then I took standard deviations from this recent manipulation leg we had lower, tapping into this weekly fair value gap, respecting it, closing above it, and ultimately running higher. And taking those standard deviations, it looks like that also lines up with the 21,800 and 21,500-ish mark. So these are some rough estimates as to where we can see price head to and possibly reverse from in the near future. And yeah, we do have a fair value gap right here below price, and we have an order block that we could see possibly a power of 3 happen where we manipulate lower, tapping into either the fair value gap or monthly order block, and then start running higher, because we do have a new 6-month and a 3-month candle. But it could also be the other way around, where we run higher first, tapping into this area, and then we reverse, which is basically the manipulation higher and then distribution lower. But yeah, I'll get into that more a little later. And weekly time frame, same thing. I have the 2 to 2.5 standard deviation range set up right here. We have this dealing range we're in currently, and why I took this low and not this low over here is because this low actually swept a previous low, essentially making it an intermediate term low. And yeah, this low didn't really do anything except bounce from this fair value gap. And yeah, this one actually took out liquidity, so that's why I use this. And this is the most recent high that we're at right now. And yeah, so we did take out external range liquidity. We're also in the 1 to 1.5 re-entry zone. This zone is basically where you can find a re-entry, and this is typically where like silver bullet happens too, usually around 10 a.m 10:30, 1 to 1.5. And I basically want to see price tap into the small weekly fair value gap. I know it can come a little lower even if we do have a huge manipulation lower, and then I want to see it basically start moving higher. That's pretty much it on the weekly time frame. We have a fair value gap right here. We took out external range liquidity, so we're going to be targeting internal range liquidity now. And look at this weekly candle, how it closed. We swept the previous week highs and closed below it, so this is signaling that we do have some bearish price action coming ahead, even though we don't have any market structure shift on the weekly. But yeah, on the daily time frame, I'm pretty sure we do have an SMT at the highs with these two candles. I'll get into that a little later, but price has tapped equilibrium in this current range. And the reason I took this low was because we swept these two lows right here. Or I mean, I took it with this low because we actually swept this low, and this is the most recent intermediate term low that we have. And we took out external range liquidity right here, so I'm looking us to basically tap into OT and start running higher, because we're still bullish on the daily. Tap into OTE, tap into this mitigation block, this breaker block, and there's a lot of PD arrays just lined up here. We have a weekly fair value gap, mitigation block, OTE of range. And yeah, if we do see a bounce here, that's going to be nice, but if we just see us completely reject this area, of course we're going to be bearish after that. And I'll just get into the charts because I don't really have anything more. And news is basically Monday, Tuesday, Wednesday we don't really have news except orange folder, and Thursday we have some news. So Monday and Tuesday could be setting us up for some high manipulation, and then I think Wednesday could be accumulation, Thursday could be distribution. We'll see how it goes, but I think my bias is highly dependent upon what London does and what Monday does in general, how the week opens. But yeah, I'll get into that real quick. So NQ right here, this is the monthly time frame. I'll just go down to around like, yeah, daily time frame. We have this fair value gap and we have OTE of current range. Let's go 4 hour. So basically what I'm looking for is either for price to respect this 4 hour fair value gap, run up higher, keep the same SMT, because we do have ES creating new highs. Let me just pull that out. Yeah, you can see on the left right here, ES has created a new high. On the right, I mean, ES has created a new all-time high, and I think we could create a new SMT like this and another SMT like this to then run lower, and essentially creating a market maker buy sell model. So Monday, Tuesday, we have a run higher, manipulation higher, and then we have a run lower for the rest of the week, basically tapping into this weekly fair value gap and essentially coming into OTE of this daily range. Or we're gonna have the opposite, which is price runs lower, tapping into OTE, tapping into weekly fair value gap, and then we have a run higher, basically a market maker buy model. And this is what I was saying, was that Monday and Tuesday is very important for my bias, because if we have a run higher on Monday and Tuesday, then I would expect us to run lower for the rest of the week, or vice versa, the opposite, where Monday and Tuesday runs lower and then Wednesday, Thursday, Friday we run higher. But why I'm more shifting towards this bias of a bearish week is because DXY in general. So DXY right here on the daily time frame, number one, we have a huge market maker buy model on the weekly time frame. You can see we have original consolidation right here, and I think we're bouncing from like a monthly POI here, and we're just running towards these equal highs and these relative equal highs up here, as well as standard deviation projections line up with these highs. And looking at current price action on the daily, you can see we're in this sell model right now. Right here, and taking standard deviation of this manipulation leg higher, we are targeting this area, which is a weekly fair value gap. Let me just, yeah, so we're basically coming down to tap into a weekly fair value gap. We're here to take out these equal lows right here, and we're here to take out this low resistance liquidity, these failure swings. And essentially I want to see us bounce from this range. So basically what I'm looking at for DXY is Monday, Tuesday to manipulate lower, and then for the rest of the week to run higher towards these highs up here. And yeah, on the 4 hour time frame, we just took out external range liquidity, right? We just took out external range liquidity, equal lows, weekly fair value gap below. Honestly, this could also happen, tap into internal range liquidity before we see a move lower, and then a run higher, something like this, right? So Monday, Tuesday, we could see a run higher into this order block fair value gap, and then a run lower into this weekly fair value gap, and then we see price start going higher. So yeah, ultimately my bias is highly dependent on what we do Monday and Tuesday, how we play out then, even what we do on like London. And yeah, this SMT is definitely signaling bearish price action. 4 hour SMT is a pretty big thing, but yeah. Okay, yeah, so ultimately to wrap everything up, I'm looking for these two things to happen. Either Monday or Tuesday to run higher, and then the rest of the week to run lower to this weekly fair value gap and OTE of the daily range. Or we see price run a little bit lower at the start of the week, Monday and Tuesday, and then we see price reverse during Wednesday and start running higher for the rest of the week during Thursday and Friday. And yeah, SMT at the lows would confirm this. I'm honestly looking for this fair value gap just based off how raw it looks, and we do have these equal lows right here, this candle low and this low right here. So something like this with the SMT at the lows would be nice as well. And that's also based off of, because DXY did just take out this external low right here, so we're going to be targeting internal liquidity, which is going to be this order block and this fair value gap right here, to then run lower. So Monday, Tuesday will run higher, which means ES and NQ should run lower in theory, but sometimes that doesn't happen. But yeah, this is what I'm expecting. And this is just a quick little thing I wanted to point out as well, was that the market maker buy model that we had on Friday, where we had this manipulation leg lower taking out these equal lows at 8:30, taking the standard deviation of that, we can see that we're at that 2.2 to 2.5 range, and we've just retraced into equilibrium of this range, right? We're just at that, and we basically closed the week right there. So this is a point where we can start going higher, and the main, well, I want to see basically what price does after tapping into this 15-minute fair value gap, and this will most likely happen at Monday London session, so that will mainly decide my bias. So if we see something like this happen, where we tap into it, tap the constant encroachment, and then start running lower, then I believe we're gonna see this happen on the right side right here, where we go lower for Monday and Tuesday, and then the rest of the week is bullish. But if we see a closure above this fair value gap, looking more like this, we're going to take out these highs most likely, and then run higher to maximum standard deviation, which is 4 right here. And possibly after we tap this right there, we start going lower, and in which this will play out, where we'll have an SMT at the highs right over here, and then we'll start running lower after that. Yeah, that's pretty much what I wanted to add in. And yeah, let's see what happens on Monday, and I'll update you guys after that.